Hello there, Oak Bloke here, and this I just thought I'd record this to chat through. Writing an article at the moment about the Oak Bloke 2025. So this is it's going to be a fun run update. So I thought I'd just record a video to sort of talk through my thinking on the 25 ideas that I picked. So as you can see here, pretty good performance actually. Really pleased with how it's all progressed. So so I'm let's have a look. We are at we're at 40. So we are at 40. Sorry, forgive me. I thought I had all of this ready. So we are at 41,530. So considering, and this is an imaginary 41,530, but started with an imaginary pick of £35,000. So 6,530. So up 6,000. So it's a 18.5% gain year to date so far. So I'm really pleased with that. And I'll say, I mean, I won't give too much away, but I think I'm right in saying that I am in second place in the fun run, but one fun runner, and actually I might be in third place thinking about it. So let me just double check. Yeah, I'm in second place. Another fun runner that has hundreds and hundreds and hundreds of thousands of readers, and I have a mere a fraction of theirs. I've so far, well, no, not so far, because there were points in time when they were beating me, but yeah, I'm ahead of them, so I'm pleased with that. Another fun runner is ahead of me. They started with 35,000, same as me. They are 8,476 ahead. So actually they are. So what's that? £2,000 ahead of me. So they've done incredibly well, because 43 would be sort of about 24% gain in 6 months. But look, it just goes to show what's possible. I mean, obviously, not everything that I thought would do well has done well. I mean, let me just talk through some of these ideas. So I know, of course, you might not straight away know these tickers. So let's just sort of talk through these ideas. So Thor explanations. This one here is my top idea for this year. So you can see it's up 141.9%. It's actually up more than that, because over here, dividends. So the portfolio has made £1,346 of dividends this year, so which is equal to 3.8% of the whole portfolio. So actually thinking about it, I should probably, I mean, obviously that is relative to the £1,000, whereas that is relative to the whole portfolio. So I probably need to think about these percentages thinking about it. But anyway, I'll have a think about that one. But yeah, what I've done is I've calculated like each individual one, how much they're up and down by. So Thor is the top one, and I mean, just quick version of why I think this has done well. I mean, zero tax was the first thing. And it really honestly was sort of like, I was looking at all the numbers and I was like, well, where's the catch? Because these guys are reporting, I mean, they did have in 2024 a bad quarter where they had record rainfall, it flooded everywhere, basically messed up their production for a quarter. But what they did was they put in bigger pumps and basically sort of said, we've taken this sort of corrective action, sorted it out, and their results have just been absolutely phenomenal. I mean, when I sort of, I mean, this article, obviously, this is now sort of going back. This is December, so I do need to write a new article. But when you look at these numbers here, um, these numbers sort of relate back to obviously. There was debt and there was, but I was like looking at it going, well, hang on, we are, well, they are paying off the debt very, very rapidly. The debt's all paid off now. So when I sort of looked at the sort of where did I see it going? It looked to me like it was on a price earnings of just over 1 times. And then you kind of consider that they've got an extra project in Senegal and another one in Ivory Coast, and these look really good results. They've got this place here that's right next to all of these neighboring mines that are pulling millions of ounces out of the ground. like, and the sampling that they've done, this is only sample, this is drill result samples, but 10 grams, 7 grams, 2 grams, 2 grams, really good results. So I sort of said here, it is early stage, but it's very encouraging. And then this one, due to same sort of thing, really. There's obviously the very encouraging numbers for the PFS. So and then you've got lithium. You've got sort of other things going on. So when I sort of started to look at the numbers, I said, well, I reckon these guys can earn like 10p 10.2p a share if I'm right about, and like you can see here, I wasn't being too, what's the word, extravagant with my estimates on like how much I thought gold would go up by. I assumed 2,600 gold, and of course, it's been, well, at and over 3,300 for the last few months, and I think Q1 2025 was maybe 2,900, 2,850 maybe. So this was sort of, like I did sort of say at the time, I think I'm being conservative. I'm not trying to kind of blow smoke, but and like here I was sort of saying the AISC of 1,050. I mean, they brought in a result of it. It was below 1,000. I'm pretty sure it was below 1,000. So these guys. Let's just go in and have a quick look because I'm curious now. But the fact this is up 140% isn't really a surprise, and obviously 42p when it's earning 10, well, I say earning 10p, it's going to be earning more than 10p because of course gold prices have gone up so much. So you can see here they produced 22,000, net income of 34.4 million. Okay, so you compare that back against my article and what I was sort of talking about them producing. So I sort of said, I reckon that they can generate, sorry, let's get rid of that. I reckon they can generate 280 in 2025. That's based on 100,000 ounces. So, um, so they've generated 64. So that is pretty much, I mean, that's 240, that's 256. So slight, yeah, to be fair, that's slightly below actually. But then, because I sort of said, so gross profit, overheads, net profit of 148. So that would, again, if you divide that by 4, you're looking at about 35. They've got an EBITDA of 43 and then a net income of 34. So actually my net income was spot on, wasn't it? And this was back when gold prices, I mean, let's have a look what the Q1 average, there we go, look, 2720. So next quarter, like, the quarter we're in now that ends in June, that's 600 higher, about, roughly. So if they're making that level of profit in in a quarter when it was sort of 600 below what I thought it would be, I mean, they're probably going to smash that and earn much more than 10p per share in 20. Oh, sorry, it's 17.4p. Sorry, that was back in last year, and that was the estimate. But again, even back then, when gold prices were sort of around 2,300, I reckon that they could pull off 10p a share for a share that you were buying at 10p a share. I'm pretty sure it was 10p a share. Let's have a look. It's I've got them all here. So where is it? Can you see it? It's this one here, look. Sorry, I was getting fooled by this bit here because it's down today. I mean, like, how is it down today? Yeah, sorry, it was a cost of 18p a share when I included it in the Oak Bloke 25 for 25. So it was at 18, it's now at 42. So 10p would have been 1.8. Yeah, that was it. I was thinking of price earnings of one one times, and that's basically where I was getting that from. So 17.4p estimate based on an 18p buy. So that's where that's sort of coming from. Anyway, that's kind of idea number one. That's done really well. MAFL is mineral and financial. It's these guys here. So I've written a number of articles about this, and like back when I wrote this article, it was 102. So today it's now 117. So it's still going up. These I think delivered something like, you can see it here. They delivered about 500,000 of gains, 500,000 of gains. But what happened was that there was an issue of shares. So actually the NAV per share went down because they basically issued shares to remuneration shares to directors. So that kind of, otherwise, if that had been on a steady state, it would have actually gone up, because this has gone up, of course. I mean, I'm estimating, based upon news flow, and this was back on 2nd of June, of course, but there's a 1.5 pence of gains in the share, and this a future could be worth. I mean, here I'm sort of saying 64p. This is merely based upon, the assumptions I'm making is I'm sort of saying, well, look, these are all the listed holdings. Now, we don't know the exact mix, but, I've kind of said these ones are all, this was sort of based on a prior disclosure, but could have changed. This was based on just, we've added all of these ideas to the portfolio. So I just sort of said, well, let's assume they're all the same. I mean, okay, there's one or two, Sigma Lithium and East West Petroleum, that are down quite a lot. This one's down a little bit, 14. I suppose 14 is quite a lot, actually. But you can see, I mean, like, even just some of these, Cerrado at 42, and this gain here, by the way, folks, is since the 31st of March. So in my prior article, I sort of said, here's the gain from December up to the 31st of March. I mean, pretty much several of these have double bags in 2025, so or more. So anyway, that's up a load, and I'm not at all surprised. Macango was up a lot more, and it's actually dropped back. So I've actually been adding Macango this week, just adding more Macango. So I still very much believe this is going to do well, because it's a Trump trade. You can see it here. It's sort of come off the boil a little bit, having hit 20p. It's now back, it's pulled back by 25%. So I thought, well, I sort of top sliced it up here somewhere. I've added back now because I do think this will do very well. Again, the news flow on this is positive. They're progressing on milestones. They've had letter of intent from a US bank. So they've got finance. I mean, basically, Trump has said whatever it takes to get rare earth magnets, because we're not going to have the Chinese hold it against us or over us. So, I mean, don't, there's a saying, don't bet against the Fed. Well, I mean, obviously, Donald Trump and the US GOP are not the Fed, but it's pretty much the same saying. So, because these guys have got the full support, and there's not really that many options apart from something like Macango to kind of get rare earth magnets. And the problem is, it's not just about getting a hole in the ground, a mine, in other words. it's more than that. It's about getting the processing and the actual refining of the rare earths is the problem. That's where the Chinese have the chokehold. So the fact that these, this is all about recycling existing rare earth magnets, because this is a way that they can do this on a really big scale and recycle, hard drives and all the places where rare earth magnets exist today, where basically they're just going into landfill. I mean, I just think it's going to be a no-brainer. The company itself's a little bit, it's like the financials behind it aren't that strong, but it's got friends in high places. So, like, if it was 12 months ago, I probably would be sitting on a squeaky chair, kind of thinking, yeah, but because of Trump and the Trump trade, I just do, I just think that um, there's just a clear path to value as far as I can see. But nothing's ever going. None of this is advice. This is just me talking through my thinking. You make your own investment decisions. The fourth one, Watkins Jones, again, really has done. Did a solid update. I need. I'm going to say this over and over, aren't I? I need to write an update article because I've not. Properly delved into that in my last article, which was this one here back in January. Again, I kind of looked at the numbers and it was, well, I'd like to say it felt clear to me that there was a lot of missed value and in fact, I almost sort of tongue in cheek said, um, let's sort of sell this off. Let's kind of let's kind of almost sort of assume that this is going to go on a fire sale and let's see what it's worth then. And even putting it into like a fire sale scenario, it it seemed incredibly cheap. So again, just I think this has got a lot more to run. Serica has had problems in 2025. I was making a loss on it for quite a while. Of course, the Middle East conflict has meant that all of a sudden oil and gas not in the Middle East is elevated, but also Triton. It's and it was this article here. Squeeze it through your Triton. Um, that you can sort of see, like the share price was at this point in April down 6.7, and because I included it on a 6x basis, so I had two ideas that I sort of said, well, even though I've got 25 ideas, I'm using an imaginary 35,000, which is sort of then because I'm 6x weighting Serica and then one other, the private equity ETF, that obviously it was magnifying my losses. So it was sort of, but now it's magnifying my gains. So actually, when we look at this, even though on a percentage wise, Serica is, let's just full screen this, even though on a percentage wise, Serica is only up 38%. I mean, this has made more money than my top two because I weighted it so heavily because I felt that there was so much disconnected value there that it felt very it felt quite inconceivable that it could do badly, but it did do badly. And the reason it did do badly, there was a terrible storm in January that damaged the station that takes the offtake of the oil and the gas, so which was called Triton, hence the article about squeeze it through your Triton. That they're fixing it, they're fixing Triton, they're also refurbing, they're putting in some redundancy. So I think that a little bit like my Charlie and the Chocolate Factory Augustus Gloop article the other day, when I sort of spoke of another, a non-Oak Bloke 25 idea, but sort of said, you can sort of see that it's all sort of squeezed in, and when it goes pop, then the price will go pop. Now, I don't think they've announced that Triton is operational. I'm pretty sure well, maybe I've missed it. It's only sometimes when I sort of record these videos that I think, well, actually, I should probably just go and check. But they've reaffirmed their production guidance. Yeah, it doesn't look like they've actually announced it. I mean, they did say that it would be June when Triton came back online. So here we are in June, and it's nearly the end of June. So maybe it has been reactivated, and they just haven't RNS'd it. I'm not sure. I mean, I would venture to say that that's probably what's happened, because otherwise, why would this kind of, this date here? So what's that? That's actually the 8th of May, 7th of May. So it's sort of just been going up vertically ever since. But again, I think this is still at an incredibly cheap price. I mean, you look at the dividends, for example. I mean, this is paying 19 pence dividends. They have cut the dividend this year because of Triton. If Triton was flying along, they'd have probably kept it at this 23 pence per share per year, and obviously 23 pence even on today's £1.80. I mean, you're still looking at what, 13%, and this one at 19 on 18, or sorry, 180. I mean, you're still looking at 11% or 10 and a half, probably about 10.6% yield. So it's very, very strong returns. And anyway, that's my 1, 2, 3, 4, 5. Kavango, this is one that is a bit of a, sort of has got a checkered reputation. It was one of the sucker stocks that I picked, but I felt that it was going to do well this year. Jury's out on it to some extent, but the news flow is very strong. They've been returning results out in the field in Zimbabwe, and of course it is Zimbabwe, so obviously that's an off-putting aspect for some people as well. But yeah, look, personally, I mean, in my last article of Kavango, I sort of said, well, look, you've got what, 40 billion of market cap companies that are operating in Zimbabwe. As miners. I mean, I'm not just saying like as businesses, but as miners mining stuff. Not all of it is mining gold, but some of them are. Some of them are platinum. Some of them are different things. So when people say, "Oh, well, Zimbabwe is this terrible place with terrible risk," well, is it? Well, how come there's 40 billion of market caps of companies that are operating there? Like what? They're sort of just like, how are they? Oh, yeah. And I did sort of put this in the caverns and hills of Zimbabwe article, but also in this article, I think it was the caving spirals. Was the last one I did, and this was based upon the fact that they are going to use spirals to and this is just a bit of fun. I mean, this isn't a real picture. I hope I'm sure you understand that, but like basically they're going to have spirals where trucks will just sort of load up underground, exit, and obviously that's a very cheap way of mining. But yeah, if we go and look at this article, I think we see that there are a whole host of or maybe it's not this article, I thought it was, whole host of companies that are operating out of Zimbabwe. So I personally, I think it's very unfair to sort of say, oh well, it's because it's Zimbabwe, it doesn't deserve. Possibly it was my Tharissa article, because these guys are also operating out of Zimbabwe. In fact, there's it's obviously sort of not far off the next one on the list. I can't find the jolly thing. Well, it's in one of my articles. You'll maybe have to hunt it out if you're interested. But the point being that, I mean, there are a number of Zimbabwe ideas in this list, and I didn't kind of intend for that particularly, but that's kind of how the cookie has crumbled. So yeah, Kavango was the next highest. I mean, obviously this one here from Tharissa is shot up. So again, this was another one that was on a loss until quite recently. But of course, PGMs have gone shooting up, and that's taken Tharissa up with it. Now, I mean, I'm particularly bullish, and in my articles I sort of spoke about, well, like people go on and on about how Caro, the mine in Zimbabwe, which by the way is not operational, it is um, a mine that is in the process of being built, and they're sort of building it on a go slow basis. But like here, I said, well, actually, when you look at the mix of PGMs that Caro has, there's some really good, phenomenally good. Yeah, it's this bit here. I noticed some people in the chatosphere worry about the Caro project. So yeah, so when you look at the split of Caro and the split of Tharissa, obviously the platinum is more predominant here. The platinum is less predominant here, and it's more palladium. Um, but like the thing I would point out is rhodium is obviously like that's the most expensive. So the rhodium 4.3. Rhodium 9.5. I mean, there's still a decent amount of rhodium there. There's also gold. I mean, this perhaps, and let's maybe zoom in on this because you can't probably see it very well. But, like Caro is 8% gold. That basket is 8% gold. And when I sort of ran the numbers, now obviously these numbers are now out of date. So for example, gold, when I ran the numbers, was just under 3,000 an ounce, and it's now obviously more than 3,000 an ounce. But you look at Caro, and sorry, I said Prill. Because I think they called their mine Prill. I think I've since realised that it's not called Prill; it's called Tharissa. So that, like, when you see the word Prill, that means the main Tharissa mine in South Africa. But the basket for Tharissa South Africa was 1,500. The basket for Caro was 1,374. I might even just whip this out. Let's see if I can grab it quickly. And I mean, it'd be interesting. Like with today's prices, has this sort of changed the economics of? I suspect it probably has, and I maybe recording a video whilst I update some numbers isn't the most interesting activity, but it does sort of raise a very interesting question as to whether Tharissa, I mean, even though it has gone up a bit this year, whether it is actually just incredibly underpriced because the model has changed. So I mean, yeah, let's just quickly put some let me just quickly grab trading economics because we'll get the up to date prices in here, and commodities. So platinum today is at, I think, about 1262. So if we stick 12, actually, tell you what, before we change, sorry, let me go back. Let's just put the old numbers here. Oh, sorry, let's put the old numbers here so we can see how much of a change we're talking. But yeah, so if we put in 1264, we put I can't easily get the ruthenium number, but I would say ruthenium and iridium don't tend to move around very much. That number there is 3371 today. Is 3371. Rhodium, bear with me, is today 5475, so it's actually gone down a slight touch. And palladium is 1049. You can see I've played around with these numbers. So yeah, look, I mean, you've got a 1672 basket, a 1556 basket for Caro and for Tharissa, and that compares to, like, when I wrote this article, I mean, the basket was 1,500, so the basket has gone up well over 10%. Well, I say well over 10%. It's gone up 10%. Let's sort of keep it in perspective. It's gone up by 170, but this basket has gone up by nearly 200. Well, let's say 180. So, but that's, and at the end of the day, the PGM, and obviously I'm ignoring ruthenium, iridium in that calculation, but you get the idea that a 10% increase in basket goes straight to the bottom line because your costs haven't changed. Well, apart from tax, but your cost of getting it out of the ground hasn't changed. Um, but the other thing that I think would be very interesting is if, um, you know, if there's people out there sort of going, uh, platinum is up. I mean, let's just stick this up onto the video. Like platinum is up year to date. Let's have a look. Uh, Rhodium is up year to date 20%. Palladium's up 18%. Platinum's up 41%. So if somebody sat there kind of like, oh, shall I lend some money so that they can get on with Caro? Um, and like my estimate, my forecast is that platinum is going to continue to go up and is going to go to whatever percentage you want to insert at that point. I wouldn't be at all surprised if they do announce at some point in the next couple of months that, like, yeah, we've got the funding, we're going to just go for it now with Caro in Zimbabwe. We're going to build that mine out. We're going to have 2 mines operating at now. Pretty sure the yeah, because Caro is in the special economic zone, so they're only paying 15% tax. They there was this question mark over whether the Zimbabwean government was going to steal 26% shareholding, but like I said to well, in this article I said, well they already own 15%, so if they take another 11, I mean, let's sort of leave aside for a minute whether or not they do or don't pay, because it's not clear that they wouldn't, not pay or not pay for the development cost. If you own 26% of something, like, it's a different conversation whether it's a free carry. In other words, like, you own 74%, but you pay 100% of all the costs of developing the mine, or we want to take 26%, but we'll contribute 26%. I mean, again, like, it isn't and wasn't at all clear whether what the Zimbabwean minister, who by the way has not repeated this whole idea, and it's certainly not in the law, and it's certainly not in the ZEDA development website, that's what they're going to do, and there's no examples of where it's been done. So, like, I would venture to say that it's not going to happen, but I don't know that for sure. But it certainly hasn't happened yet, and here we are 6 months later. Anyway, if you're talking of a 15% tax rate, and you own 15% tax rate, and you own 85% of it, I mean, that's gonna sort of be chucking off some good profits as far as I'm concerned. I mean, I'm pretty sure there's uh, an internal rate of return, an IRR of something like 20+%, and that was at silly prices when gold was at much lower prices and platinum at much lower prices and so on. Look, I'm not going to go through every one of these. I mean, others that I would call out: OCN, Ocean Wilson, disposed of its holding. It's gone ahead. So pretty much exactly as I sort of said in my rationale, in my thesis, in my investment thesis, they're going to do a tender offer. I remember somebody seeing somebody say, "Oh, that's a load of nonsense. They'll never do that." Well, guess what? They have. So, who was talking the nonsense there? So, yeah, they're going to do a tender offer. They're also talking about merging with Hansa, so that would create a 900 million beast. The tender offer is they're going to do a reverse auction, so that'll be quite interesting. But yeah, this pretty much guaranteed profit, because the tender, well, nothing's guaranteed, but the tender offers for higher than the share price, so that's into profit. As you can see there, made 25% again, plus dividend. I mean, over here with this dividend, the dividend is 6% yield, I think it was, something like that. Gore Street, again, they've declared their next dividend. There's potential for the special dividend, which will be another 3p, which will be a nice chunky. So this has chucked off dividends. Still feel very positive about it. I think there's a great opportunity in the space of BES. I mean, you look at Harmony, they got competitive offers, done very, very well. Obviously it's been sold now, but that didn't get sold off at 50% discount to NAV, and GSF, again, even with this price rise of 21%, GSF is still on a vast discount to its underlying NAV, and the NAV itself is there we go, 39.6. So yeah, lots of value there. JPL, that's done all right. That's kind of doing disposals and different things, so that's coming along. BGS, the smaller Japanese, well, I cover that quite regularly, so you all know that that's just phenomenally. Like there's holdings like Yonex within that have double bagged. They've got rid of the investment manager, so jury's out to see how that new manager will pan out over there. But I mean, Japan itself, the Japanese market, I think there's vast opportunity. And in my last article, I was saying, well, these are like, of the top 10, record profits, record revenue, record profits, record profits. They were all reporting very strong results. So I yeah, I think that one's going to do very well for the rest of 2025 as well. This one has started to creep up. This is Mercia, but I mean, I think this one's going to explode, is my personal opinion. I mean, I don't know that for sure, and you make your own investment decisions, but I've kind of thought to myself, I mean, it does pay a small dividend, but it's on a significant discount to NAV, and yeah, so again, an SEIT again was down for a lot of this year and is now creeping up. It's going to announce results next week. I'm looking forward to those because I'm of the view that they're going to be strong results, and that we'll see a big re-rating into the second half, because this is just like complete disconnected, boring assets that you can buy at bargain prices when the price doesn't reflect the risk, as far as I'm concerned. These two I got rid of. I'm pleased I got rid of Water Intelligence. I think the more I thought about it, the more I said, do you know what? I'm absolutely, don't think this is going to do well for that. But we'll see. I mean, maybe I got it wrong. Maybe it will do well. But yeah, I was very much of the opinion that the Q1 results were weak. The Q4 last year results were weak. I made the decision to include it based upon the Q3 results, which were strong or looked strong, but it just didn't carry through the momentum. And the thing that just killed it for me was when I saw a competitive product where you just clip it onto your pipe in your kitchen or in wherever you've got your water mains, wherever you've got your stopcock, clip it on, and the technology that, and I'm talking about Ondo InsurTech, the technology basically works on the basis that it looks, and it's the only one that it's got a patented design, so it's the only one that can do this, that it will take the temperature of the water, temperature of the air, and what happens when you've got water flowing is water from underground will be cooler. So when water stops flowing, into your pipes, basically the temperature of the pipe should return. So when it doesn't, that suggests that water's still flowing. Now that sounds kind of, like, okay, well, but what they're able to do is do that at a very, very microscopic level. In other words, they can detect a teaspoon of water leakage in a space of a minute. Now, a teaspoon a minute is like, that would be pretty much like a drip, like a dripping tap. So well, I don't know that literally, but I suspect that that's what the measure is. So when I sort of learned of that, and then I compared it to Water Intelligence, where you've got, like, a plumber's got to come along, he's got to cut your pipes, and I thought, well, like, there's absolutely no way I would cut my own pipes, and I don't know anybody, even like brave DIYers, that would cut their own pipes. I mean, that's just asking for trouble. So then you're saying, like, oh, I've got to get a plumber, cutting pipes. I mean, you're into like the hundreds of pounds of installation at that point, aren't you? And then you've got a device that doesn't do this temperature check, it just measures flow. Well, okay, but that's not as good as checking the temperature, is it? So I just felt it and also there was no clear idea of what sort of the commercial terms were for water intelligence. So I just said, "Do you know what? No, this is that like the Ondo Insurtech was the nail in the coffin, but the results as well. And obviously they dressed it up very, they dressed it up as in a way that made it look good. But I looked at the numbers and thought, no, actually, like when you compare this against this, and particularly like the product revenue is down, like what's that? And also that you've just gone and bought all these franchises back, so why are your numbers not increasing? That scared me. That looked wrong to me. Just quickly cover off a couple of these. I mean, Apax has been creeping back up. I've written a few articles around that. I do think this one will do better in second half. Pure Tech's been an annoying one, but biotech and US biotech is just, there's a lot of, I mean, if you go and look at Biog, which is a investment trust, I think, if you go and look at, like the US biotech index, I mean, the whole sector is doing badly. So pure tech is sort of doing badly alongside them. I do think as well that the schizophrenia drug hasn't done as well yet. So the jury's out on that one as well. Cadence reported their full year results. I mean, obviously that's down. That was always going to be and I hopefully said that this was my speculative one where if it comes off, it's going to be a massive upside. But this certainly wasn't going to be a 6x. This one, XLPE, was a 6x, but obviously has got caught up in the whole Trump tax, big beautiful bill, you name it. But again, I looked at all of the main holdings. I didn't go right the way down to the ones that are sort of 0.5% or something, but these ones that are sort of like the Blackstone and the KKR and the 3i, which is in the UK. I mean, they're all posting very, very, very strong results as far as that goes. And my last article kind of covered those a bit. And so, yeah, I mean, the in the next few weeks, we'll start to see the Q2 results coming through. And that will be an interesting set of results because obviously that is post tariff and so on. But the thing to bear in mind that XLPE, I mean, these private equity, well, I say private equity, these are investment managers who invest in private equity, real estate, and private credit. A lot of it actually is private credit. So that's loans and real estate and also real assets. I mean, there's bridges and motorways and hospitals. I mean, it's not just like it's got the word XLPE, PE being private equity, but don't let that fool you. And that was because I went out hunting for a private equity idea because I felt that 2025 would be a year where private equity was kind of going into defrost mode. And that sort of hasn't happened as quickly. I did think that Trump would be about deregulation, encouraging business, and I thought, well, private equity is going to fly on that basis. The bit that I sort of didn't fully appreciate was how big a hand grenade of tariffs he was going to throw into the mix as well. So you know that's been sort of mixed fortunes. But I remain of the view, I strongly remain of the view that Trump wants his presidency to be a legacy. He is shooting for the legacy. He is not doing tariffs because he's an idealist. He's doing tariffs because he wants to build a legacy. And the legacy I believe he's trying to build is that if you can get consumers, and I appreciate taxpayers and consumers are pretty much the same people, but if you get you get consumers to um, oh yeah, that's a good idea. Sorry, yeah, the person that's just sort of said that, I'll do that. That's a great idea. I mean, and yeah, just quickly say the dividends I sort of lump together, and I have sort of thought to myself, well, should I lump them or should I split them against the actual holdings? Because obviously this one here, like even though this is 38%, just quickly show you this. I'll go back to my idea about Trump in just a second as well. But yeah, just to sort of show you the dividend, or sorry, the gain is 2,300, but actually, do I have the dividend? Well, the total dividends are 1,346, and I'd say probably half of that. Um, oh yeah, and I don't know how to do that with the yeah. I mean, I don't know if I maybe switched off my camera, you'd be able to see. Maybe I should do that. Switch off my camera, and then you'd be able to see the bottom right-hand corner. All right, just need to move the page up a bit to remember that you can't see the bottom right. Yeah, that's kind of always. Yeah, there's been a few videos where I've kind of gone, oh, I've but yeah, I'd say about half of that is Serica. It was a very very large dividend. So anyway, yeah, back to the idea about Trump just quickly. I'm conscious that we're at 45 minutes, so we probably need to knock this on the head quite soon. But yeah, I do sort of remain of the view that um, if Trump can kind of get consumers to pay tariffs, because that's who pays the tariffs. It's not, what that will do is basically sort of open up and that's kind of where the big beautiful bill comes in. That if you can cut income tax and sort of, it's kind of like if we talk about in British terms, if you sort of basically doubled VAT. If VAT was 40%, but you said like you don't pay any income tax, so if you want to buy a car, you'll pay VAT at 40%, but like you won't pay any income tax. So like it in a way, like somebody would look at that and go, oh well, you're just robbing Peter and paying Paul. Well, exactly, but that's what governments do all the time. I mean, that's it, redistribution of wealth. But I suppose the idea is that he promotes like the idea that, well, look, if you work hard, well, you'll earn more money, and then like obviously we can then sort of make certain things, and obviously US goods wouldn't be taxed in the same way, so that would encourage US goods and discourage the purchase of imported goods, which obviously then increases the economy. So that remains my thesis, is that Trump is all about just making the economy strong. That MAGA, Make America Great Again, all about whether it's successful, whether it will be successful, whether he can, and also sort of what happens with the US government deficit, which of course is vast, and not yeah, that's the theory. Anyway, just sort of concluding then, I haven't talked about aviation. I'm going to be writing an article on that one I might even do it this weekend. But I do think aviation is going to do really well in the second half. I mean, the fact it is down year to date when they've sold a Boeing 777, that basically all of their aircraft have increased in value. The NAV, or the estimate of NAV, because obviously there's not an official NAV, but like the estimate is that it's not far off £4 a share, NAV. And like this is for a share that you can buy at £1.50, £1.56. So that's what, 60%, or more than 60%, slightly over 60%. Now, obviously, the official NAV is lower than that, but in my article, I sort of talked about doing mastermind and the rentals on them as well, and also the deleveraging on them as well, because there's all this sort of COVID era debt when basically the airlines started going bust. So they, in other words, aviation's customers started going bust, so they kind of had to get some emergency funding, borrow some money at not great rates, let's put it that way. So I mean, that is working its way out of the system now. Here in the news flow, they've been deleveraging, pay down debt. You can see it here, pay down debt. See, that's going back to 2024, but yeah, I mean, like here for example, I thought this was a very interesting, excluding the aircraft we've just sold, the the NAV is favorable by approximately 82 million unaudited. This is indicative only and subject to market fluctuations. So what they're telling us is like, well, our fleet of aircraft, because of the shortage of aircraft, you know about Boeing being sort of having some production problems, and even Airbus has had some production problems this year, and and there's not really sort of very many alternatives. I mean, you've got Embraer that do very expensive corporate jets, and a few others. I mean, Chinese are not accredited to sell. And the thing is, because accreditations and safety sign-offs take so long in the aircraft industry, that it's not as though there's anybody that can just sort of say, "Oh, let's start up an aircraft company and get into competition because Boeing is in on the ropes or anything." Like it's the nature of it is that these shortages are quite structural and will remain structural. And they also flipped a little another ATR 72, so they and they sold it at above book value. So yeah, look, I mean, the fact that that's down 1% year to date is ridiculous as far as as far as that goes. But as I say, nothing's nailed on or guaranteed. But that sort of concludes what I was going to cover today. It's as I say, actually, just quickly cover these as well, just in case. Sort of, I sort of like looked at the industries. Now, obviously, these are just how Stockopedia classify them, so I wouldn't call them all financials. But anyway, I kind of said, well, how did so this over here is the percentage gain. So the super stock ideas. Now, bear in mind that these are ones that are super stocks today, not super stocks not necessarily super stocks back in December. In fact, I was a little bit of a rebel where I sort of said, well, I'm not going to just go and pick 25 super stocks. I want to pick a couple of ones that are labeled bad apples because I believe in them and I believe they'll do well. And like Macango is a great example. It's done really well. When you've got the government behind you, well, you can't really not do well in some ways. Um, and obviously the technology is proven in the sense that it's been around for years. They've physically been able to sort of separate rare earth magnets and do so at less energy, and those are just scientific papers. So anyway, super stocks are sort of performing the best. Value traps have lost money. Ideas that don't have a classification have lost money. Suckers, yeah, interestingly, suckers have made money. So that's kind of the Kavango and Macango. So I didn't realize they rhymed. I've just realized. And then sort of neutrals and momentums so anyway, this is sort of like the sum of gains, but that was interesting. And also the super stocks, pounds and pence gains have made the most, and ideas that have the highest scores have made the most, but some ideas that have the lowest scores have made gains. So that was kind of just a couple of ideas about sort of trying to analyze what works, what doesn't work, and so on. So that's sort of the Oak Bloke 25. Obviously, I'm a week early from the half year end, but I'm probably going to do the article this weekend, and we'll do a fun run update over this weekend rather than next weekend, because I go on holiday next weekend. So I probably I'd be in a lot of trouble with Mrs. Oak Bloke if I messed around when I should be packing suitcases and different things. So anyway, that's enough from me. I hope that's been useful. Thank you for the chat comments. Always good to get sort of people's feedback and thoughts. If you like the video, then like it, share it, whatever. Do appreciate your support. Yeah, more articles coming in due course. Oh, sorry, just read this one comment. Uh, investing is more about what you do with your positions than what you have selected. Of course, you're within a limit, you lose all the, yeah. I mean, yeah, you're right. Yeah, you know, I don't my in my personal life, I don't just invest in the Oak Bloke 25 for 25 and buy them all at 31st of December and then sell them all this 31st of December. That's like I do say this in one of my articles, like it's not a realistic thing to be doing a fun run because of course it assumes when you sort of say, oh well, this person's done the best and this person's the worst and this person's the best. Well, it's only based upon a 12-month window, assuming that you spent exactly the same or invested the same amount on every single stock, and that you held them, you didn't sell them, that you made, there's so many permutations that analyzing someone's performance, it's like, well, it's like, how do you actually do that? It's a very, very arbitrary way of doing it, as far as I, and then, uh, but at the end of the day, people do judge you. They do. So like, and my approach has always been like, if I'm doing well, I'm not sort of saying, oh, look, I've made these huge gains to kind of get plaudits or anything like that. I'm obviously I want to make money. Like, that's the whole point of investing, is that you want to kind of do a good job, make money, and not lose money. Like, first rule, don't lose money. Um, but equally, if I'm doing badly or if I've chosen something stupid, like, it's my way of soundboarding that idea. And obviously there's always going to be somebody that says, oh, that's a completely terrible idea and this is why. That's all good stuff as far as I'm concerned. I mean, I won't always agree, and sometimes when people kind of just kind of are a bit stupid, I'll get a little bit wound up or whatever. But we're all human, aren't we? It's. But yeah, I do absolutely take your point about that sometimes you want to invest. I mean, and I mean, I do sort of pick these ideas as investments, as in, like, I'm not saying buy them on the first of the month and sorry, first of the year and sell them on the end of the year. Like, these are sort of what I sort of consider long term, things that will generally work over the long term. And in fact, when I no longer believe that, like I did with water intelligence, I just sort of, that's where I sort of write an article where I say call in time, and this is why I'm calling time. uh, but yeah, I think it's always healthy to kind of do stuff like, well, this has had a really strong run up, so I'm going to just take some money off the table. And that you've always got to kind of yeah, just don't overtrade, because overtrading is equally as bad. But to kind of don't just sort of treat it as like, look at it once and then just sort of close your eyes and yeah, that, like, not look at it again. But equally, I think it is easy to kind of get obsessive about it, where sometimes by over trading and just that it's better just to kind of chill. Don't if you've chosen good ideas, they'll come good. That's kind of where I sort of keep in my head, is to sort of say, well, fundamentally, has something changed? Is there a sort of a reason why? And like, that can also be a very healthy thing, that um if you no longer believe, well, this is a good test. If you sort of say, like, forget that I've bought it, something I hold, forget that I've bought it, would I buy it today? And like, if you say no, then you sort of then have to say to yourself, well, why am I holding it then? If I wouldn't buy it today, why am I holding it today? Like, if you're nursing losses, I mean, you can sort of see the evidence here. Like, if you're nursing losses because you sort of, oh, I want to get my money back. Well, if you bought something else that can then double, then it doesn't matter about the loss. Like, I think you've sometimes got to have confidence that if you no longer believe in the idea, cut your losses, get out of it. Just and even if it's like, I don't know, like, even if it was 99%, I mean, hopefully it doesn't get that far in the first place. But if you no longer believe in something, just absolutely just go for it. Like, don't treat it like, oh, I've got to make every horse win. um if you've ever played those little, those games where there's the different horses racing, and then they sort of one of them speeds up, and it's like a fairground thing with different horses, and it's sort of like a metal thing with different like horses running down a sort of uh, the the way that that game works is that you sort of work out the one that's sort of going to speed up, and if you sort of look at it that way, that is actually a way that and I don't say that I get it perfectly right, but sometimes when I've got a conviction on something, like I had a real, like I wrote it in an article, so I'm not just sort of talking, but I sort of said, like, I realized that this one is going to do really well. And I think it was in an article in like February, and I sort of said, right, I need to lean into this one. So rather than sort of, oh, it's like a equal weighting, I sort of leaned into that one, and that's done really, really well for me. Now, I think there's more to come with MAFL. And actually, it's very interesting that when you look at, like, it's down 1.2% today, but it's not really moved very much. And actually, this is a really interesting thought as well. If you track, just show you this. If you track this versus silver and gold, because obviously, well, I mean, particularly gold, because they've obviously got, I mean, you can see here, like, this has been pretty much static since here, which is, there we go, 28th of February. So if we just pop gold as a comparison, I mean, since that date there, look, gold was 2857, gold's now 33 something. Yeah. So, like, this is what I'm saying about the horses running. Like, if you can see that, like, the thing that will drive this price beyond this level here, not that I'm a chartist, because I think chartists are, well, chartists explain fundamentals. So when people